Every major hyperliquid pullback has sparked the same debate. Is this another opportunity or the start of a bigger correction? More than $900 billion has already been allocated towards hyperliquid buybacks, and that keeps creating long-term demand for the token. Even after a strong run, many traders still see the mid $50 and below as an attractive long-term entry zone. GM everyone, welcome back to Coincheck. This is Abhishek and I'm watching T.O TV. Hyperliquid is one of the most important tokens in crypto right now. It started as a high-performance perpetual exchange, but the market now treats it like something much bigger. An on-chain exchange, a layer 1, a revenue machine, and one of the strongest projects in DeFi. So Hyperliquid has already had a huge run, but the recent pullback has created a new question. Is this one of those moments where anything below $50 starts looking like a gift? So today, let's break down what Hyperliquid is, why Hyperliquid matters, and why many traders still want to buy the dip. So what exactly is Hyperliquid? So Hyperliquid is a high-performance on-chain exchange ecosystem. Its core products is a perpetual futures exchange, but the platform has expanded into spot markets, native staking, and HyperEVM. Hyperliquid runs on its own layer 1 infrastructure built for speed, deep liquidity, and a centralized exchange-style experience while staying crypto native. The Hype token is the native token of the ecosystem, and the key reason people care about it is simple. Hyperliquid's activity feeds directly into token demand. So what's the fundamentals? What's been happening with Hyperliquid lately? So Hyperliquid just came out with a fresh new update launching outcome of prediction markets. What does this mean? So basically what happens is earlier when you had to launch an outcome market on Hyperliquid, validators needed to approve it. Now in the next upgrade, it would be permissionless, meaning that nobody needs to approve it as such. The only condition would be you have to stake 500,000 Hype tokens to launch an outcome market on Hyperliquid. Why is this an important update for Hyperliquid? Because during FIFA, for example, so Polymarket and Kalshi are the top 2 outcome markets right now, and they did more than $50 billion in volume during FIFA. So now Hyperliquid getting into the same game and letting anyone to launch their own markets without any permissions, that is a very huge win for the industry. So number 1, Hyperliquid is still a real revenue machine. Hyperliquid is not just a narrative token. It generates real trading revenue from actual user activity, and that revenue is what makes the token interesting. Public reporting shows the protocol has already crossed $1.2 billion in cumulative fees since launch. Number 2, buybacks are the core of the thesis. The biggest reason many traders like Hyperliquid is the buyback loop. Data shows more than $900 million has already been allocated towards Hype buybacks tied to protocol revenue. That means when volume is high, the protocol buys back more Hyperliquid. And when the buyback engine gets stronger, supply gets tighter. Number 3, Hyperliquid is expanding beyond perps. Hyperliquid's HIP3 framework has opened the door for markets like stocks, commodities, indices, and pre-IPO style perps. Hyperliquid is evolving from a crypto derivative venue into a broader 24/7 market for global assets. Number 4, the medium-term setup still favors dip buyers. Even after a strong rally, many traders still view the $50 zone and lower as an attractive zone for long-term exposure. That does not mean the token can go lower in the short term. It can. But if you're looking at this as a multi-month or a cycle trade, Hyperliquid still has one of the strongest setups in crypto. So if you look at the price of Hyperliquid, Hyperliquid trades around $61. The market cap is at $13.6 billion. The TVL sits at $6.3 billion. So we move on to the technical analysis. As you can see on the chart on the screen, remember this is a long-term trade. So the primary entry sits at $60. You can add more at $50. And if you want to buy long-term, that is what traders are calling out for on Twitter and X. You want to add $50 and lower. So that's what we're looking at. And the stop loss would be $45. We've got 3 targets. So the first target sits at $70. Second at $85, and a longer-term target of $100. So what's the verdict? Hyperliquid is one of the strongest fundamental stories in crypto. It has real users, real volume, real revenue, and one of the best buybacks in the market. For long-term buyers, anything below $50 starts looking very interesting. So that marks it end towards our today's Coincheck episode. Remember, this is not financial advice. Please consult a financial advisor before making any financial decisions, as crypto is a highly risky and volatile market. Thank you for watching T.O TV. Subscribe to our YouTube channel to be updated with the latest news and events happening in the Web3 space. I'll catch you guys again on my next Coincheck episode on Wednesday. Goodbye for now and happy trading.